guys, welcome back to another video. In today's class, I have revised all the concepts all together, and also this is a doubt clarification session, so you can learn a lot from it. Thank you for watching.
This spike marking,
Hmm.
sometimes the top swing is, I mean, the swing is broken by the weak bars.
You mean the
So
first
that is
swing
also a
is,
spike.
sorry, you are saying the first few bars in the spike is starting from weak bars.
No, no, no. All
Then
bars are weak.
all bars are weak. Then if you are, see, it doesn't matter if all bars are weak. If at least few of them are strong trend bars, but even if they're insignificant, it's fine. Maybe we won't take those trades, okay, because it doesn't fit our criteria, entry criteria later on. But if the market dropped few points, like say 15 to 20 points, then bears were taking control of the price during that section. Maybe on
You
five.
will find that Bajaj Finance just
Okay, 1 minute. FinServ or finance? Finance only, right?
finance. Just
Which days?
6 cents it was 30. Yeah. Let's see 10.
It's in a beautiful structure for swing trading. 10th September, huh?
Yes, yes, you see the one which I gave you.
I didn't see the date actually.
Yeah. So now one,
Hmm.
2, 3, 4. Okay, first three bars.
Hmm.
So this is the spike.
Yes.
First one,
You
2, 3, 4 bars.
exactly.
Okay.
Hmm.
Now this now the head is the top is broken by this doji bar.
Yes. This
But
one.
sometime, yeah, sometime, okay, now in this second spike, we have two strong bull bars, but sometime all the bars are weak
Okay,
bars.
this second
And
spike, you're calling this a second spike, no?
yes, yes.
Yeah, that's fine. But in future, what will be the second spike? This will be spike one, spike two. Here, in the future sessions, when pullback structure comes in, we will call this as the pullback structure only. This won't be the spike. Here, for now, to make everybody understand how to mark out a spike. See,
Mm.
what is the theory now? If at all we get a bull breakout, we will mark out every bull spike. Later on, whichever is significant for us, we will mark only those. What do I mean by that? See, this one is a significant spike. So we will look for another significant spike. Here we will mark this initially. At least we will keep in mind, okay, this might lead to a spike. These two bull bars
Mm.
might lead to a spike, and we'll get leg one,
Mm.
pullback leg two, or maybe leg three, and a parabolic wedge stop or whatever. Uh, but did we get that? We didn't. Instead, this retraced below the pullback pivot.
Okay, can you show again, please?
Which was the pivot now? This was the pivot high, right?
Yes,
This bar.
yes.
And which was the deepest pullback point within the pullback? One, two, three, four, five. It took 5 bars to go beyond the high.
Hmm.
So this was the lowest point. Once the
Yes.
once price goes above the pivot high, and
Mm.
instead of continuing to make higher high,
Mm.
higher low structure, which is a channel structure. What is the theory? First breakout, then a pullback phase, then it should be channeling upwards. Why channeling upwards? Because we got a bull breakout. But
Mm.
instead, after making a higher high, it is also making a lower low. This was the low.
Yes,
This low is lower than this low.
yes,
So here only it's behaving like a trading range. Why do we call
yes,
it a trading range? Because instead of going into a channel, now it's breaking that character. So we
yes.
don't know if it will go into a trading range. I mean, it will remain in if it will remain in a trading range or continue to go higher after forming a trading range or break down. Here, after going into a trading range, which is actually a tight trading range, if you see this,
Mm.
this is a tight trading range, right?
Mm.
So the trading range started from here. Once it violated the pivot low, this pivot pullback structure's
Mm,
lowest point,
mhm,
we will invalidate this spike. Okay,
mm,
just to
okay.
explain to you, this drills will come again. Don't worry. Just to explain to you, for now I'm saying what we will do in future. So this will be the trading range. When did the price break out? Let's say
Mm,
this was the first attempt. So leave this. Okay,
mm.
this spike. If you want, you can mark this as a. If you want, actually we will mark in future. We will call this. We'll categorize it into different pullback structures.
No,
Let's
no,
not go
no.
in.
This we were marking bull spike,
Yeah,
and
yeah,
it broke the
pivot
lower.
structure.
I mean pivot. Yeah.
Yeah.
So
So yeah.
after that
Now
bull bear bar, we will start marking again. That 1045 bear bar.
this one.
Yeah, yeah, yeah.
Okay.
Yeah, 1040 bear bar.
Wait
Yes.
until it goes into a trading range. That's why I told wait for 20 bars.
Mm. No, no, no.
In
What I mean, okay,
see
first,
it reversed right. It reversed right.
yes,
But
yes,
it
yes,
reversed
yes.
a minor bull spike. Which is the major bull spike? Which is the major trend? It's
Bull
still
trend.
bull trend. When did I say you have to mark? I mean, you have to shift only when the price is a trading range open day. What is a trading range open day? You got a bull spike, immediately it reversed. So we are still trying to find which is the actual major trend when it's a opening range.
Mm,
Okay.
mm,
Once you get a clear direction, be it bull trend or bear trend,
mm,
that you'll keep it as a major trend. When does the major trend change? Once the change in character sets in. Here, when did it set in? Okay, here it set in. Does it mean that it will go into bear trend or reverse from here and continue to go higher and make a bull trend or go into a trading range? We don't know yet. That's why I told the first time you get a change in character, you always wait to see what it will do. What does Elbrook say? The
mhm,
first reversal attempt is always minor. That is what I'm
mhm,
saying. First character change is always minor. Ignore those. I mean,
mhm.
it is actually important. Don't ignore, but in terms of trading those, ignore those.
Mm. But so then what we will do when this spike is invalidated, if it is
This spike
broken?
is invalidated. That means the pullback structure is invalidated.
Yeah, when the
This
low of
minor
this
spike.
spike is broken, yes.
Yeah. So what does
Then you
that
said
mean?
that then we have to look for another spike.
That is what I said in the opening range. For example, okay, take this. For example, here we got a weak bear bar, then a strong trend bar or a breakout
Mm,
bar. Now, if I have to mark, initially I will mark, okay, maybe this will lead to a spike. Did it? It didn't. This bar went beyond the high of this bar.
mhm.
Now I will say, okay, that got invalidated. The first bull bar was this bar. Although be it a bull doji bar or a trading range bar, I'll mark here. Sorry, excuse me. Okay. Now I'll mark this as the initial spike. Where did it extend? All the way up here. Okay, one, two. Okay, no. Here only it ended. One, two, three. One, two, three. The third bar didn't go beyond the high. So why did we mark this? We know that the price started to go higher. Here also, we initially don't know if this spike will last. We will just mark and wait. Suppose we got two big bear bars and which went below the low of this pivot. I mean this starting point of the spike below this low. Then what would you call that? Then I would say, okay, it's invalidated. We will see what will happen. But if it's big up and big down, it will be trading range again. All those concepts will come later. We will categorize all the spikes too. So if I have to say in general, without confusing you, keep this in mind. 50% of the days, the first breakout direction will reverse. If it's a bear breakout, it will tend to reverse in the upper direction. If it's a bull breakout, it will tend to reverse in the downward direction 50% of the time. So keep that in mind. So the first breakout might fail. Here, did it fail? Yes. So this succeeded. Maybe if this also failed, And then based on the categorization of the spike, maybe I will call it a trading range day, or if it broke down strongly and then if we got MPB and then continuation, then I would call it separate, a different kind of a spike, strong spike, weak spike, or decent spike. Okay. Only in the opening range we will do that. Once we have a established trend in one direction, here we got a established bull trend. So we will only look for bull spikes unless and until we get 20 bars within the pullback structure. And if we get a bear breakout, then we will switch our we will switch our bias into bear trend, or else we'll keep looking for bull trends only or bull spikes only. Here what happened, this was the pullback structure, it violated the pullback structure. We actually wanted it to print higher high, higher low, but since it didn't and it violated the pivot of the pullback structure, we will wait for the price to tell in which direction it wants to break out next. Why? Once the change in character sets in, we don't know if it's going to be a bull breakout or it will remain in a trading range or it will give you a bear breakout. Is this much clear? Wait for an established trend. Once the established trend is set, then wait to see only once the pullback structure's 20 count is exceeding, you have to see, or if the change in character is set in, which means the pullback structure is invalidated, then you wait and see what will the price do next. Until then, don't change your major trend bias. Major trend was bullish. It is only telling you that hey, I might change my direction once it violated this pivot. And the first time it does something opposite to the major trend, always ignore those trades. That is why I told this will come in pullback categorization. This red box, not in spike categorization, because major trend is this. This is the bull spike. This is the pullback. Even in my marking, which I have sent, if you see, I don't call this as spike. I'll name all the relevant spikes as spikes only, be it weak spike or descent spike. All the pullback structure, I'll call it, which are relevant, I'll call it deep and strong pullback or just strong pullback or deep pullback, like that.
Mm. And this system, 16th, 16th chart, September 16th, next year.
This only, right?
Yes, 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 yes.
Huh.
Here,
Bull spike,
yes,
bear spike, pullback exceeded. This went below the low. So this is a violation of this
yes.
spike. So this was spike one. Why? Because we don't have a established trend. Here you got the understanding, right?
Where is the
We
spike one?
see initially we thought maybe okay, this might lead to a bull spike.
Uh,
We are still in a trading range. Did we get a good
mm,
follow through? Did we get a higher high structure? How was this structure? We got a clear breakout. Here, what was the thing? We got a clear breakout and price started heading higher. Did that
mm,
happen on this day? We got
mm.
a okayish bull bar.
Mhm.
Do you remember we did the second day's drill as or class two's drill as marking breakout and follow through bars? If the first bar,
Mhm.
if, for example, if the first bar is a bull bar, be it a weak bull bar, at least if the second bar is a strong trend bar or a breakout bar, we will call it as a breakout and follow through. Here, what is happening? We got a okayish bar. We are waiting for a follow through bar, but instead we got a bear reversal bar. Instantly it is telling okay, this is also trading range bar because huge wick, a huge tail, huge wick also, and small body and huge range. The next bar is also reversal bar and we got a huge tail on top of this bear bar. If you don't want to analyze that as each if you don't want to analyze each bar, wait for a clear breakout. When did the invalidation of this spike happen? Here on these two bars, and this was the first breakout and follow through bar. If you see, bear bar following a bear bar. Every other bar was like bear bar, bull bar, bear bar, bull bar, bear bar, bull bar. So there is no actual breakout yet. If you were hoping that this bar would turn into a breakout and follow through bar, that also didn't happen. But where did it get invalidated? This bull bar here. Whoever wanted to get leg one pullback leg two, they got trapped here. Maybe they will scale in lower and exit for a break even. That is another topic. We will come to those two in while discussing major trend reversals, because it works very beautifully if you are trading major trend reversals with limit orders. So now this will be the first bear spike, pull back, second bear spike, pull back, third bear spike.
Okay.
Okay, and we will slowly see where the price is reversing for major trend reversal. Where do we scale in for a major trend reversal? Where do we scale in for a breakout and follow through? Because scaling in, although Hilbrooks has thought for only scalp trades, he never thought it for winning trades. You can add for losing trades to get out at a break even and maybe a small profit on the second entry or the third entry, whatever scale-ins, how many ever scale-ins you do. But that is preferable for those who have a larger account and those who know how to read price actions maybe for at least 6, 7 or plus years. Even I can't, even I don't scale into my losing trades because it turns very quickly and you will be struck not knowing how to react to it. Unless you have a bigger account size, it's very difficult to do it and you need more experience to do it. But once you have a winning trade in your hand, maybe it reached 1 hour or 1.5 hour, maybe then you can say, okay, if it even falls to the break even point, let it come to zero. I don't mind giving anything. I mean, losing. I don't mind not gaining anything, but I don't want to lose anything. Means you will only keep that break even stop loss and see for a swing. Or if you want to be aggressive, that okay, this is a winning trade and it's giving me a scaling opportunity, then I'll add to my trade and risk a bit much. If instead of risking maybe 1%, you are risking on your normal trades. Now you may be risking 1.5 or 2%. Usually, how I want to do is, I'm. It's been only few days since I started scaling in, so I'm only risking like 0.25% of the account on the first try. If the trading, I mean, if that trade is giving me positive results, then I will add 0.25% more to test out how it reacts
Okay.
to gain that experience. Slowly, we will see those two. So, is this much clear?
Yes,
Unless you
yes.
get a proper breakout direction, don't mark that spike. Just keep in mind, okay, this might turn into a spike. This might turn into a spike. Okay, did it turn into a spike? It did. Did it violate the recent whatever uh, spike you thought it would be? It did. So mark this as 1 and 2 and this as 3. Any other doubt?
18th September 7th.
This one only, right?
Yes, it's 18th. So
Okay, we got.
now you see
Hmm.
this, as soon as this first spike low is broken, the price
Hmm.
is again reversing.
This one you are
Uh,
saying, right?
yeah, yes, 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 yes.
This is spike 1
You have score
because
one, two,
this is a
three.
breakout bar. Single
Yes.
huge breakout bar. 1, 2, 3 bars passed. So this is
Hmm.
PIB.
Hmm.
So this is leg 1, leg 2,
Okay. Let's
leg
see. Yes.
3. So spike 1, spike 2,
Uh,
spike 3, wedge
okay.
bottom,
Hmm.
reversal. How do we know it's a wedge bottom? You have to see how many PIBs you are getting, how deep is the pullback within the PIB. We will backtest everything, but just to keep you aware of what is happening.
Hmm. So now when
Hmm.
this low, we got three pair spike, and
Yeah.
then what we will do? This is a bull spike also
If
for
you
me, so
want
we will
to
see.
see, if you want to trade wedge setups, then you will take this entry because this is a strong closing bull bar. It retraced almost three past 3 bars, and you got multiple strong bull reversal bars, one bull bar and one more strong bull bar, and we got 3 pushes down. So this is a bear trap also. If you don't want that, wait for a breakout of the EMA. Where did it break out? Here it
No, no,
break.
no, no.
Hmm.
Regarding marking the spike
Hmm. This will be
now.
the pullback first. In breakout and follow through, this will still be the pullback.
Okay, then this spike is broken, the invalidated on the
Here it
11.
invalidated the recent spike,
Yes,
no?
yes, yes, yes.
This bar.
Then yes, then what we will do? We will start looking for bull spike.
No, no, you wait for a change in character. This was the change in character, the first attempt.
Yes, yes.
But instead of going into a trading range, which it should, it reversed completely. How do we know that? Breakout, pause, micro pullback, follow through. Micro pullback, follow through.
Okay.
Is this confusing?
Yeah.
Okay.
After.
Okay, see, this keep this much in clear. Once you got the previous spike invalidated, what is it
Hmm,
saying? It's saying change in character. These are
hmm,
the three outcomes. Either I'll reverse the direction. This was a bear trend. I'll reverse the direction and
hmm,
go into a bull trend. Or
hmm,
I will fake you out. I'll be strong on the for the bulls, but I'll reverse again and go into a trading range. Or I will fake those bulls also and trap bears also, and then give me
hmm.
a bear breakout. Okay, that is very
Okay.
strong on the downside. But how do we know which of the three will be coming to us, or how to trade those? Here, what is happening? Okay, in the previous example, where was it? This day, right? Here you see, even if you mark the bear spike, this was the spike one, 1, 2, 3 happened. Okay, 1, 2, 3. This was the spike one. This is the spike two, and in the spike two, this is MPB one. If you wanted to enter, you didn't get an entry also. Keep that aside for now. I'll explain all those later. But what is happening here? You already got two spikes down. Here, what is happening? First spike, second spike is continuing still. How do we know it's continuing? This was the MPB, it went above.
Mhm,
Again, this was an MPB, it went above. Here, this is the fourth bar, which is going beyond the high. Yesterday in the last class, I told you at times, not at times, it's a specific rule where we will discount this as the zeroth bar and count this bar as the first bar, second bar, and third. I'll explain those rules
mhm,
when MPB sessions will come. Maybe
mhm.
tomorrow or day after tomorrow, I'll explain those. But
Okay.
this is continuation of that. Even without that, if you don't want to trade the minor reversal, leave it. Just mark the spike. Okay, this is a or you will say this is a deep and strong pullback. Wait for the reversal. Where did the bears get trapped last time? Here or here, right?
Mm,
The last or the latest entry they have is this bar's close, or the biggest
mm,
bear bar was this bar's close. What happened when price reached there? If
mm.
you see, it bounced, right?
Yes.
So either you can enter on limit orders, or see, it will give multiple opportunities. You don't have to trade you cannot take every single enter. It's better to understand everything. I'm not saying you don't have to understand. You have to understand because that will add to your skill. Maybe not today, maybe not tomorrow. Someday it will come in handy. But try to master one particular concept first. If you are only taking breakout and follow through trades, take only breakout and follow through trades. Here, what is the major trend? Bear trend. Here,
Mhm.
what is this? This is a pullback. We still haven't
Okay.
invalidated anything. 20 bars passed, and but instead of going into a trading range, it's a V-shaped recovery.
Mm,
Trading range means it should be going somewhere like this, but it's going upward vertically.
yes.
So what it's signifying? More strength on the bull side. So what
Mm,
happens once it comes down and retests? This was the major trend reversal stop entry. This was the major trend reversal limit entry. Maybe you enter here, you scale in here, you exit at 2R. Once
mm.
you scale in, you have to exit at 2R at least some bit. If you are not scaling in, you got 4 or 3R. You have to study. If it's 1,000 rupees stock, I would say risk no more than how to put it. If I'm trading Nifty, I wouldn't be, that is around 25,000 rupees. So I wouldn't be risking more than 30 points. If it's a E-mini contract and the price is at $5,000, then I wouldn't be risking more than 6 points. So 10% of that, don't risk more than 10 rupees. Keep your limit
Okay.
entry here, which was the latest here or here. 10 rupees is somewhere here. Maybe 10 rupees is too much, right? Yeah, where is 20,000? 25,000 means 20 points means they should be around. No, I don't know. Actually, I have to backtest for this. This particular stock's behavior, I have to backtest. Or you can use ATR or ABR to see what is the average bar range after the first six candles. The first six candles, you ignore those and try to find out, or ask ChatGPT or Perplexity, whatever AI you can, and try to find out how much it will usually move. Maybe you have to see for 5 points or 3 points. Else it will be too much, right? It didn't even give you 1 hour if you risked 10 points. So maybe 2, 3 points. I don't know. You have to backtest and see for this stock. At least backtest for 100 odd days and see what is the average limit entry stop loss you want to keep.
Okay.
Or if you want to keep the win rate high, keep the stop loss like 5 or 10 points, but you don't have to always win 1:1. Maybe you can win zero point 0.6 hour, zero point 0.7 hour, zero point 0.8 hour.
Mm-hmm.
But when you're losing, you need to scale in and get out at break even, or you should be able to take, okay, you should be psychologically sound to say, okay, it is a big loser, but I still know in the long run, if I take 100 such trades, I'll still end up with making money.
Okay.
So limit order, you have to backtest on this. Backtested on E-mini, 5 points is good enough. If you are very risk averse, keep 6 points, no more than that. Usually, if you go for, where was the, okay, even if you see this day, bear spike D pullback, limit entry here or here, 4.5 points. It gave you 2 hour, get out. Limit entry, this is where you got a scale in entry. Maybe from here also, if you see, if you bought the stop, this is 0.25. This was your limit entry. So this is your average price. This is the average price, and this is your stop loss now. So 5.5 points. Did you get 11 points? You did. So you get out there. 2 hour you got. Because see, 1% you're risking and making 2 hour is different. 2% if you're risking and making 2 hour is like 4% on your account. On your winning trades, if you scale in, you have to get out pretty quickly and you have to know where to get out to.
Yes.
So any other doubt?
No, okay, we will mark on.